In this video, I will be analyzing high-quality dividend stocks that are great deals right now in the market. I know what you must be thinking. Why am I listening to dividend advice from a guy wearing a SpongeBob t-shirt? Trust me when I say in the end of this video, you too will agree with the ways of the Bob when it comes to these high-quality dividends. So the first stock I want to go ahead and look at is Realty Income. I know this is kind of a no-brainer. It's a staple across most dividend portfolios, but right now, in my opinion, it is the time to go ahead and buy in. Let me go ahead and explain why. So there has been a correlation to the stock performances of real estate investment trusts, also known as REITs, with rising interest rates. And as we know right now, interest rates are really high in order to go ahead and combat inflation, right? So for example, here is a quote from an article I recently read on Bankrate. Rising interest rates hurt not only the value of REITs property holdings, but also the cost of debt to finance those properties or even refinance already owned assets. But regardless of all of that, let's go ahead and talk about another big positive with Realty Income. So Realty Income pays its dividends monthly instead of quarterly or annually in some cases, right? So as a result of this, you get a lot more frequent dividends that you can go ahead and reinvest. Finally, the reason I picked this stock over another popular REIT like AGNC is because even though AGNC has an extremely high dividend yield, it's been trading downwards since its inception, whereas Realty Income has gone up 557% since its inception, even though it has also been trending down in the last 5 years because of the recent pandemic. Despite that fact though, Realty Income had a dividend growth for the last 26 years and has paid dividends for 26 years straight, making it a great buy. So to go ahead and summarize, Realty Income gives a steady monthly dividend and also has a great growth aspect at the time of recording this video. And now I want to go ahead and talk about the second stock I want to go ahead and recommend it, and that is Starbucks. Now, Starbucks has fallen nearly 28% this year alone, and I want to go ahead and talk about Warren Buffett's famous quote, which is basically saying the stock market is the only place when an item goes on sale where people go ahead and run out of the store, again, instead of inside, right? So I definitely think this is an example of that. Starbucks has had a consecutive dividend growth for the last 13 years, as well as paying a consecutive dividend for the last 13 years, according to Seeking Alpha. And Starbucks also pays its dividends quarterly, and its yearly yield is around 3.04%, which equates to about 57 cents a share quarterly at the time of recording this video. So if you were to hold 100 shares, for example, you'd be receiving around $57 quarterly, which is, again, something I highly suggest you go ahead and reinvest. The final stock I'm going to go ahead and recommend is Johnson & Johnson, and this is a safe dividend stock that has recently also taken a hit. And again, when stocks like these take a hit, you want to go ahead and buy the dip. So Johnson & Johnson's dividend is paid quarterly, and its yield is around 3.31%, which can also be ahead and converted to around $1.24 a share at the time of recording this video. Johnson & Johnson has also been paying dividends and has had dividend growth for the last 63 years straight, making it an extremely reputable dividend stock that I believe will have additional long-term value than what it's already had, aka a dividend king. Do you agree with my stock picks for 2024? Let me know in the comments below, and if you have any insights to your top performers in your portfolio, please go ahead and let me know in the comments. Remember to drop a like and subscribe for future videos, and I'll go ahead and I'll see you in the next one.